equity strategy at Jefferies. He's joining us from the Swiss Alps in Switzerland. Chris, thanks very much for joining us. You, of course, you have a perch at Jefferies. You also publish Greed and Fear since 1996. Have published many, at least 3 critically acclaimed books. Someone I read very closely. So, Chris, a big question for you at a broader level, a big question everyone in India is asking is, what is holding FPIs back? We've seen 4-5 months of sell-offs. We've seen a turnaround in July. Over the next few months, how do you see the picture where India is concerned and foreign investors are concerned?
Well, yes, when I was last in India, which was in February, I was asked that question by, the many Indian investors and Indian media. And the answer I gave basically still applies. And that is that the key reason for the big net foreign selling of India from the beginning of last year relates to the focus of capital markets, global capital markets, on the AI story. Mm-hmm. And in the emerging market context, that led to a huge rally in semiconductor stocks as these estimates of US hyperscaler capex kept rising. So we're now, the current guidance going into the latest hyperscaler results we're going to get later this week. But based on what they guided last quarter, we're looking at $700 billion of hyperscaler capex. By hyperscaler, I mean companies like Amazon, Alphabet, Meta, and Microsoft. And at least a third of that spending, or that hyperscaler capex, has been going on semiconductors. And so you had this massive rally in the memory stocks, which is primarily Taiwan and, more importantly, Korea. And as a result of which, foreigners had to chase the soaring neutral benchmark weightings of Taiwan and most particularly Korea. And the market they most aggressively sold to fund their buying in Korea was India. So this has been the most dramatic change in benchmark weightings I've ever seen in 30 years of monitoring Asian capital markets. As you say, we've just had the 30th anniversary of publishing Greed and Fear, and I've never seen such a move in terms of relative weightings of Korea like we saw since the start of 2025 to the end of the first half of this year. And the end result was that by the end of the second half, by the end of June, 3 stocks accounted for more than 30% of the global emerging market index. Those 3 stocks were TSMC, Samsung Electronics, and Hynix. Samsung Electronics and Hynix have forecast profits this year based on analyst estimates of more than 3 times the total profits of the companies in the Indian Nifty 50 benchmark. So you can see the scale of these profits these companies making are massive, and foreigners simply had to chase these soaring stocks. And that's the key reason why you had this big foreign selling of Indian equities. The reason foreigners have returned in the first few weeks of July is because we've had a deep sell-off in the semiconductor stocks, a rotation. So the all-important question, which is not clear yet, is this just a rotation out of a hot trade representing profit taking, or is the sell-off in semiconductor stocks we've seen so far in July sending the signal that despite what the hyperscalers are saying, the capex in the next year will not be as big as what the analysts are currently saying as regards semiconductor capex. So that's the key reason for the foreigners having sold India. So for the foreigners to return in India for large-scale buying of India by foreign investors, the most likely trigger for that would be a collapse in the AI trade. The other way foreigners return to India, which I think is also possible, there's no sign of it as yet, is that if suddenly domestic mutual fund inflows ceased or went zero, then the Indian market would have a big correction. Then it would become cheap, and then I think foreigners would return too.
Chris, there is a
But
view.
the most important driver is this AI story. Yeah.
So there is a view about the AI story overheating, and also that some of the Asian markets being oversaturated at the moment, and therefore there is a view that some money may return to India. What is your response to people who make that?
That's been happening since the start of July. That's true.
Yeah.
That's entirely the case. But for that to be a lasting phenomenon, you need these estimates of this. Basically, the market needs to start questioning the capex by the hyperscalers. So this is the key. The key issue here has nothing to do with India and everything to do with what's going on in the US market.
So this has got to do more with the global trade setup and wider issues as opposed to specific things which are germane to India, is the point that you're making.
It's got nothing to do with India. These hyperscalers are spending enormous sums of money. As I say, 4 companies have guided to spend 700 billion US this year. The estimates for hyperscaler capex next year, combined with spending for companies like Oracle and the so-called neoclouds, is $1 trillion. So these are enormous sums of money. But personally, I don't believe they will be able to make proper returns on this investment. My long-term base case is that there will be massive capital destruction in the US. A lot of this money will be wasted. But the key market timing issue is when the market starts to focus on the lack of returns. Because when the market starts to focus on the fact that the hyperscalers won't make an adequate return, then the stocks will be sold, and that will send a message that they need to cut their capex, and that will be negative for the semiconductor stocks. So the key issue is what's the relative and absolute performance of the hyperscaler stocks in the US market. And they have started to underperform.
So in the midterm to long term, do you remain bullish on India?
Yes, the Indian market has had some issues, but what's been horrible in India last year was the relative performance of India relative to other Asian markets, most particularly Korea and Taiwan. And that performance was made worse by the weakness of the rupee. But in absolute return terms, the Indian stock market was not disastrous last year for rupee-based investors. And the interesting part of the Indian market, where I've been most positive, but it's obviously already now outperformed, has been the mid-cap stocks. So the mid-cap stocks have done extremely well. They've had better earnings growth than the blue chips. And the impressive momentum of the flows into Indian domestic mutual funds has been maintained. So in rupee terms, the Indian market's done perfectly okay. And tactically, while I like mid-caps, long run, I still prefer mid-caps in India. Tactically, with the mid-caps having outperformed to the extent we've seen in recent months, it would be logical to see some catch up in the blue chips. But I would say in the big blue chips in the Indian market, there's a lack of exciting thematics. The biggest thematic affecting Indian blue chips in the last 18 months has been a negative one.
Right. So
India's been the reverse AI trade.
Right.
So you'll be dealing in global stock markets obsessed with AI.
Right.
India's reverse AI, and there's one sector in India which is completely, under existential threat from AI, and that is, as you know, the IT services sector.
So, Chris, very quickly, you mentioned the rupee's weakness. A quick question on that. The government and the RBI have taken certain measures. Do you think? Do you expect? People expected things will change. They haven't changed. The rupee still remains rather weak. What's your sense of that? And should the RBI or the government intervene strongly on this issue? What's your position on that?
Well, no, my position on the rupee last year is the rupee weakened more than I was expecting. Frankly, weakened much more than most Indian corporates and investors were expecting, and that's just a plain negative. Because, so I would say it's unfortunate the authorities let the rupee weaken as much as it did, because India is a domestic demand-driven economy. So that has damaged confidence of Indian corporates. Indian corporates were not set up for the degree of rupee weakness that happened. So that's a negative for confidence. So it's probably going to require, it's going to require a tighter monetary policy than there would otherwise have been.
So if you were advising the Indian government, would you...
The damage has been done to a certain extent already. It's already in the price.
But if you were advising the government of India or the RBI, would you advise them to intervene and to fix this?
Well, I think right now they're aware of it. My key point was earlier they let the rupee weaken more, I think, because they're worried about the export sector and the tariffs. Because you remember Donald Trump had inflicted these crazy high tariffs on India. So I think there was a desire to help the small businesses. But I think that's frankly a mistake because India is a domestic demand-driven economy. Therefore, I think a rupee that weakens much more than the people were anticipating is a negative for business confidence. And you saw that with the huge surge in gold imports into India late last year.
So,
but I don't think it's a disaster, but I think it's a setback for the Indian story. But it's one that's now discounted in the markets.
Okay, Chris, one of the things that you've been talking about in I think in one of your last recent issues is about gold. When you talked about a possible new rally in gold, and you advise people to invest in gold. Can you tell us a little bit about that and why do you argue that?
Oh yeah, no, very simple. I've been a long-term bull on gold, but when gold had a huge run last year into early this year, and then when the Iran war began, which was a genuine surprise to markets, no one was expecting the US-Israel attack on Iran. Gold did not make a new high when the Iran war began, so that was a signal to me that the gold market had peaked for now and that we entered a period of consolidation. And I've been viewing the trading range of gold in this consolidation period we've been in since I think late February. I've been viewing the sort of trading range as 5,500 at the peak and 3,800 to 4,000 at the low. So we're now at the low of this trading range. So I think people should start looking to start accumulating gold again now. Yeah. In the long run, the reason I like gold is because I still believe in the US dollar debasement trade.
Right. One final question, Chris. How big is the external account issue for India? I think people had factored in certain increases in the crude oil and so on. But despite that, we are seeing an issue in the markets. How big is the crude oil issue as a risk in the market?
You've had this capital account issue, right? Because you've had the big portfolio outflows from the equities. Hopefully, we've seen the bulk of the selling. I think, the worst of the selling of India is probably over. If it actually becomes clear that the AI capex story is peaking out earlier than markets were anticipating, if this semiconductor sell-off is more than a technical correction, then I think you can get real return of money into India. But the other thing that's been going on in the last few years is that you've had a lot of selling by private equity investors of their Indian stakes. And they've been able to sell their investments in India at very attractive valuations. And that has meant that net FDI has come down a lot because of the big selling by the private equity investors. So at the start of this year, the global private equity industry, which is facing, in my view, a lot of problems right now, had 29,000 companies, I believe, it wanted to IPO at the start of this year, according to this report by Bain Capital. The reality is, in recent years, the one market they could list their investments at attractive valuations has been India. That's selling, so that has also contributed to the capital outflows. So beyond the well-publicized issues of energy, there's this capital outflow issue, which has definitely hurt the rupee. And clearly, I think the government's now trying to address this issue by this bond issue aimed at NRIs, right?
Absolutely, and I think this year, or the first quarter of FY27, we've seen a net FDI reaching $6.5 billion as opposed to a low of 6.9 billion all of FY26. So there seems to be some shift happening there as well, but early green shoots of that.
early green shoots, but I've had massive capital outflow, which is it's an unfortunate combination of circumstances. One is this ongoing pressure on these private equity franchises in India from their head offices to sell their investments because they can't sell their investments anywhere else. That's got nothing to do with India. Actually, India's success is the cause of the problem because India's created a lot of very good long-term investments for private equity. My guess is that in some of these cases, they're under pressure to sell the investments earlier than they wanted to because of pressure from head office.
Right.
Because they can't sell their deals anywhere else. And second, the second thing, unfortunate circumstance, is this massive rally in the semiconductor stocks. And as I said, the key number is that these two Korean semiconductor companies, I think, are forecast to make 3 times the amount of money as the whole of the Nifty 50 benchmark companies.
Right, Chris Wood, thanks so much for joining us from your house in the Swiss Alps in Switzerland. And we hope we'll speak again in the next 3 or 4 months.
Yeah, I hope to be back in India in a couple of months. Thank you.
Thank you. Thanks, Chris.
Thank you.